My name is Brian. I'm a certified public accountant and certified fraud examiner. Currently, I'm the managing partner for Brian Forensics LLP, a public accounting and national financial investigation firm based in Nairobi, Kenya. In the year 2023, we investigated close to 50 fraud-related cases. And in the next few weeks, we want to share with our good audience some of the details about these cases. Specifically, we are going to share what the situation was, what our strategy was, and what our findings or results were, without necessarily delving into the details about these companies. In this episode, I'm going to address the question of where did the money go? Where did the money go is a common statement in the boards of non-profit organizations. After raising millions of US dollars, primarily from 4 key partners, a non-profit organization was ready to show how money was spent in the furtherance of the organization's mission and purpose. The only problem, they couldn't show where money had gone. In fact, the non-profit organization's financial reporting system was so flawed, was so unreliable, to the extent that the board suspected that the employee who set up that accounting system intentionally botched the job in order to conceal fraud. Their suspicions grew when the employee abruptly left the organization and when they realized that the employee had failed to properly integrate the third-party payment processor to the accounting system, leaving the management with inability to be able to show how money was spent. The board of this organization therefore retained Brian Forensics to be able to conduct a financial forensic review to determine whether money was spent well and to assess if any wrongdoing occurred. As a practice, before we conduct any investigation or any financial forensic review, we have to answer this question: is there a probable cause? In other words, does predication exist? Now, in forensic accounting parlance, predication simply means the totality of circumstances that would make an objective, reasonable, and professionally trained person to conclude that fraud has occurred, is occurring, or will occur. In this case, predication existed. Our approach or strategy in a financial forensic review is to gather, understand, assess both quantitative and qualitative evidence in order to pinpoint accounting anomalies or potential financial impropriety. This therefore means that before we delve into the non-profit numbers, we gained a comprehensive understanding of the organization's purpose and mission. With this information, then we'll be able to identify transactions that fitted within the non-profit organization's profile and those that deviated from it. The review was extensive, covering a 5-year period and nearly $3.25 million US from major contributions and about $2.7 million US in disbursements. We deployed advanced data analytics to compare the accounting system transactions, in other words, the transactions that the employee said happened, with the bank data and the third-party payment processor, which actually shows the real money or how money flowed in the organization. With this data and analysis, we were able to identify organizations' transactions that conformed with the organization's profile and those that deviated from it. As a result of our financial forensic review, we were able to demonstrate to the organization a clear picture of how transactions happened, including those transactions that deviated from the organization's mission and purpose. Was there good news? Yes. The good news was, whereas we found a few discrepancies between the bank records and the accounting system, the amounts involved were minor. In the end, our team recommended a set of policies and procedures to the accounting function of the non-profit organization. And we were glad that we were able to help this organization to strengthen their internal control systems.